Chad, welcome to Breakpoint 2025.
Great to be here.
Awesome to have you. Let's get right into it. What is the latest and greatest with Paxos that we should know about? For an audience here that is largely sort of skeptical of the institutional adoption in the medium to long term, and a lot of developers who feel like the focus should be back to grassroots developers. So sell us on the stablecoin regulations and why this is truly a watershed moment that's going to last longer than 2 years.
Yeah, well, look, I'm very sympathetic with that. I was just telling somebody, Paxos has been around before Ethereum. So we're certainly, in some ways, OGs and very much believe in the concept and the spirit and the ethos of decentralization. And actually, we just bought a wallet company called Fortify last week, which is purely for institutions who want to be able to access DeFi as an institutional self-custody wallet. And I certainly believe that is really the future of the financial markets. I love how DeFi and what Solana's been able to bring to the DeFi community is, and how on-chain is going to really fundamentally change the entire basis of financial markets, and I think capitalism too, all for the better. At the same time, there is about $900 trillion of traditional assets, not on-chain assets. They're traditional assets, and they need to get on-chain. And in order to get them on-chain, you have to do it in some way. And actually, that's why we built Paxos, which was, how can we take the traditional financial world and migrate it on-chain so that it can operate in a more decentralized, open, and transparent way? And clearly, the way that's happening most obviously is with dollars, which is how do you create stable coins and have stable coins be able to move around and be accessible to anybody. And with the passage of Genius, this is going to be done with a regulatory framework, by the way, that Paxos has followed now for 7 or 8 years as an issuer. And that's going to help be able to create trust and oversight and actually, I think, a common set of standards that's very important. But it's not just about stablecoins, it's about all kinds of assets getting pushed on-chain. That's what Paxos is about. How can we use our wallet infrastructure to help create issuance and create much bigger adoption of traditional assets in an on-chain environment?
Okay, I think folks have heard about your impact on stablecoin. I want to talk a little bit more about on-chain equities and sort of the broader class of assets outside of stablecoin. But before that, USDG do you treat that as a successful launch?
I think, anytime you're going from 0 to 1, it's not easy to do. We're at about $1.5 billion now, and so it's been growing. In the last quarter, it grew 2.5x. I'd certainly love to grow 2.5x every quarter. That would start to become compoundingly impossible. But it has a great trajectory right now. Basically, every major exchange has listed it. It's now you can use it as collateral on a number of different places, from OKX to Kraken. Other places have been adding it. Bybit just joined. And so it's really becoming much more ubiquitously available. It's usable in Visa and MasterCard and Stripe, a whole number of payment providers. And so I look at this and think, to me, there are going to be a number of rails that major firms and different communities are using. I think it'll be maybe 2 to 5 of them. And then there's going to be something like hundreds, maybe even thousands of white labels. And I think white labels of all kinds have a very important place to play, just like rewards cards and branded credit cards and everything. But there's still only like 2 to 5 payment networks. And I think there'll be 2 to 5 stable.
Yeah, that's part of why, sorry to interrupt you, but that was part of why I think I was really excited about USDG being sort of, once it takes off, a lot of these companies that are part of the network can start to issue white label stablecoins. Is there a reason we have seen a delay in that, or do you think those are just conversations that take time to materialize, and we'll see more of those coming out in the next year?
White label conversations take a while because firms, there's a bunch of different choices you can make. Do you want to kind of roll your own, the entire thing from top to bottom? Do you want to use another stablecoin like USDG or the PayPal stablecoin or whatever it might be as an underlying rail? Do you want to kind of do something like M0? Do you want to have common reserves? There's many different mechanisms you can have to create your own white label stablecoin, and it also depends on what are you trying to achieve. Do you think you're going to compete as one of those 2 to 5 rails, or are you doing it for your community and you want the rewards to be able to go back to help with your token or to help with other users? And so I think there's a number of different ways you can build a white label, and once you start going down that rabbit hole, sometimes people have to spend a little bit more time than they really thought around the design phases. But ultimately, you could get a stablecoin launched if you wanted to very quickly. We could do it in a couple weeks.
Okay.
You could do it in a couple weeks if you wanted.
And if you're advising, say, a company like Starbucks, to make a choice like that, or just a company with a lot of consumers that want to have eventually a loyalty program? What would be the design decisions you would make on the white label?
I think if you're really trying to do it for your own user base, I think you're almost just creating a branding experience. If you control the UI UX, you might not even need to have your own stablecoin. You would just control what it looks like in the UI. So that would be like the latest version of a white label, which is we just control the UI. Guess what? You're using a Starbucks card, and it's USDG underneath. And then you can create whatever rewards mechanisms you want out of it. And then you can go a layer deeper, which is, you know what? It's actually, you know, S-bucks money or something, right? And then what is the reserve assets? Do you want it to be a stable coin that's underneath that, or do you want it to be like actual treasuries? Do you want it to be Genius compliant? How do you want to make it all work? And so if I was advising someone, I would say, if you don't think it's going to be a global rail, and by the way, a lot of people think they're going to build global rails, a lot more than will ultimately be global rails. So there's going to be a lot of disappointed people in the world. But if you don't think you're going to be a global rail, you should really piggyback off of the liquidity and the rails that other people have set up. Because it's not easy to go get yourself accepted in all the payment networks and all the exchanges and all the collateral frameworks and do all the lending and be on DeFi. It's just not going to be possible for everyone to do that. So I would always try to push someone away from that, but ultimately, we're an infrastructure provider. And we're neutral infrastructure. We're going to help our customers do whatever they want. Who am I to say whether they're going to succeed or not? I can give them some insights from how I think the market's going to be, but you know, I'm not here to be right or wrong about exactly where the market's going to be. What I want to be is right or right about the infrastructure.
That's awesome. Yeah, I think you know, startups can perhaps punch above their weight by investing in loyalty compared to performance marketing, where a lot of the juice has been squeezed out, and you know, they're hyper-efficient advertising markets. And so I was curious if you're seeing small companies also test this idea of like a white label stablecoin paired with a loyalty program.
Well, you definitely are, because there's a number of companies where they have good networks, remittance companies or other ones where they might even have big on-the-ground presences, and they can create apps and they can create experiences. And in the case of something like USDG, one of the benefits of it is we're returning all the rewards, all the interest is being returned. We just keep an asset management fee. And in fact, in USDG, you don't just get the interest on your own balances, you get the interest on any balances you're helping to create. Now, we can do that because institutions have to join. They're the distributors. Under Genius, you can't pay direct rewards to the end user, so you have to do it through a distributor, in essence. And that mechanism is somewhat convoluted. I really think there should be interest-bearing stablecoins. We actually had one here out of the UAE, but you're kind of having to deal with what is the art of the possible from public policy. So I think eventually you'll get to that point. Everyone's so worried about interest-bearing stablecoins, but eventually you're going to have tokenized T-bills and tokenized repo, and the risk-free rate's going to be democratized. The cool thing about stablecoins is they've democratized access to the dollar all over the world, but it's even, I think, far more impactful when you can democratize access to the risk-free rate. And USDG does that, but maybe not totally perfectly because you can't do it directly to the end user.
Yeah. On that note, do you think that we're moving in the same direction with equities, where you can democratize access to stocks and companies that are really the only instrument today to beat inflation for a lot of investors? And so democratizing access to that makes sense in the same way that we did for stablecoins, where if you have a wallet or a fintech interface, you should be able to buy a derivative of a stock just that gives you access to the price action, or perhaps the full stock. There's a plethora of experiments. How are you involved in that? Are you involved in that? And what do you see as Paxos gets into 2026?
So we don't just have dollar stablecoins. We issue the PayPal dollar and the global dollar. We actually also issued the Pax Gold product, and that is underlying gold that's held in vaults. It's about $1.4, $1.5 billion as well. It's fully regulated. When you own the token, you own the gold. You can actually put in your, you can come with your token, and you can see the serial number of the bar that you own. It's pretty cool. It's common law. You own the bar. You don't own anything to Paxos, owe anything to Paxos.
And where are the vaults?
The wall can be anywhere. You can. It's just issued on chain, right? So
the gold.
Yes.
Where is it custodied?
It's cool. The actual physical gold is custodied in London. So
Okay.
there's a couple different depositories in London, ICBC and Brinks, where we hold the gold. And if you own 400 ounces, you can actually come and redeem a bar. Not many people do that because 400 ounces is a lot of gold. But anyways, we've done that 3 or 4 times, but it's the actual physical gold there. And by the way, our stablecoins are the same thing. We hold T-bills. It's not ours. It's our customers. Yep. And I think it should be the exact same way with equities. And we actually settled real live US equity trades. This is kind of forgotten in the mists of time here, but we had a no action letter from the SEC, and for 2 years we settled real live equity trades in pilot form for Bank of America, Credit Suisse, SocGen, Instinet, Wedbush, a bunch of broker dealers in the US. And after Gary Gensler came in, the no action letter lapsed, and kind of things went into a holding pattern. And we have now submitted an application to the SEC to be a clearing agency, which is a depository, but for stocks and for bonds. And in that way, we'll be able to hold stocks and bonds and issue them natively on chain, and you will be the holder of the stock and the bond. It won't be a derivative instrument, it'll be the underlying. Just like you should own the underlying gold, just like you should own the underlying T-bill, you should own the underlying stock. It shouldn't be a derivative instrument. I don't think there's anything wrong with that, but you really want to have leverage and counterparty risk layered on top of the underlying asset, not be the underlying asset. Otherwise, you're just creating too many layers of fragility. Somebody fails along the way, and then you can have a problem. And you could easily have that with other instruments, and that's why I think the Genius Act was important, because it stopped that with stablecoins.
Do you think we'll get, if with that restriction, do you think we'll get to a world where people can own stocks without KYC, similar to how we own stablecoin without that?
I would love that to be the world. I think that's ultimately up to the regulators because there's securities law restrictions on what needs to happen and what a company needs to own.
Within the extent securities regulation, do you think that is a realistic possibility?
Yes. I absolutely think it's a realistic possibility. I think you're always going to end up, because every jurisdiction has an issue of who is an accredited investor or some version of that, and so you have to have some mechanism to gate a wallet because there's limitations on who can own certain types of securities in certain types of jurisdictions. And so setting aside that layer of compliance that's needed, it should be able to move seamlessly, permissionlessly, on-chain, on a public chain.
Yeah, I mean, the US capital markets have been the deepest capital markets for a long time now, and they have a near monopoly in the IPOs of some of the biggest global companies. Do you see a world where, we actually did an analysis where we saw the volume of assets traded on different venues in the US, in China, and the long tail of regional capital markets, including the UAE, India, places like this. And if you remove Bitcoin and stablecoin volume, the internet is the third most liquid venue for trading assets, and that's all of the crypto trading that happens. So I'm curious if you think in the future, in the very near future, we can partner with techno-progressive governments like the UAE and the securities sort of regulator here to have IPOs in the UAE regional market, in the Dubai financial market. You tokenize that on Solana, and 95% of volume actually happens on Solana. And it's more volume than you would have had if this regional company had listed in the US, because a lot of investors just don't know about it.
I think that's exactly what the blockchain enables. It doesn't matter where you list, because you're on a public chain, and a public chain is the internet, and it's open to everybody to be able to access. Whatever the restrictions are in some jurisdiction for someone to own it is a different matter. You've just created an open distribution mechanism. And there's an analogy of this, which I'm unfortunately old enough to remember, which you basically had trading that was on the floor. It was manual, it was done analog with people. And you traded in like eighths and sixteenths and quarters. And the amount of volume was very low. And then you went electronic and you traded in decimals, and everyone was so afraid, oh my God, if it goes decimals, we're not going to earn any commissions. And the amount of trading volume went up about 10 to 100x. Right? And so the amount of price compression versus the amount of trading and access that happened completely overwhelmed the compression. And I think that exact same thing will be what happens when you go on chain, which is you're going to completely change the amount of trading that's possible and the amount of access that's possible on a global basis. So you can, again, 10x or 100x the amount of trading volume that happens. And there's like, I don't know, $250 billion a day that trades in US stocks, and it's really basically 7 stocks or something is a majority of it. or the plurality at least. And they're trading $250 billion a day. I bet you will look and we'll say, wow, it trades like $2.5 trillion at like some period like 5 or 10 years from here, and we'll all be surprised. And everyone had been so afraid of it going on chain, and it actually was the best thing for capital markets and for liquidity and for companies to raise money.
Yeah, that's awesome. You betrayed your age with that example. But I agree. And I think the analogy I like to use is like, you were watching an HBO show. I don't know how many views you got, but now, if you're outside the US, it's hard to get access to HBO. Your cable operator needs to probably have a partnership with HBO to get it. But then if you have a YouTube link, you can click on that and anybody anywhere in the world can watch the same video. And similarly, any asset listed, hopefully by Paxos, that's a reflection of the traditional financial market, can be purchased by anybody anywhere around the world, allowing them to create a portfolio that's resistant to all of the uncertainty and inflation that we're likely to face. So that's really exciting. We're very glad to work with you, and thank you for joining us today.
Great to be here. Thanks for having me.
Thank you very much.
All right, thanks.